Sandra Koschel from KSM Group. Well, last night was the night of night for us accountants. It was the federal budget hand down. Joe Hockey handed down his second budget as Treasurer. And as foreshadowed, the budget contained not many surprises because certain announcements have been released over the last few weeks. So let's go through a summary of key points. Our full detailed budget breakdown is available on our website, so you just need to click the link at the end of this video. It's important to remember that, of course, these are just announcements and they are not law until they pass through Parliament. So let's start with business. The company tax rate for eligible small businesses, so that's with an annual turnover of less than 2 million, has been reduced by 1.5%, so down to 28.5% from its current rate at 30%. The great outcome also is that those small companies can continue to frank dividends of up to 30% still, which is excellent. Small businesses that are unincorporated, such as sole traders and partners, are eligible for a tax discount on their profits of up to 5%, and that's at a maximum of $1,000 per year. Small businesses will no longer be levied on capital gains tax on a restructure, and this is fantastic. So if you're trading your business as a sole trader or in a partnership or even a company, you can now do a restructure to, say, a trust, and there won't be any capital gains. Now that's excellent. So that's a great time now for you to review the structure of your business to make sure that it's right for you, both for asset protection purposes and for tax minimisation. Small businesses will be able to fully deduct the cost of purchasing assets if they're under $20,000, an immediate write-off. This is fantastic. So this became in effect from last night, 7:30 p.m, the 12th of May. Now it doesn't have to be, no limit to just one, so more than one per year. If the asset is more than $20,000 a year, it still has to go into a pool and be depreciated at the normal current rates. It's for motor vehicles as well, not just plant and equipment. So let's take a look now at some other tax announcements. The government will now increase the Medicare levy low income threshold for singles, families and single seniors and pensioners. So this means that more Australians will not have to pay the compulsory Medicare levy, which effectively will save them 1.5% of tax. Currently, individuals can claim car expense deductions under one of four methods, and those are the cents per kilometre method, the 12% of original value method, the 1/3 of actual expenses method, and the logbook method. So from the 2015-16 year, the government's going to modernise these methods of claiming work deductions for cars, and they're going to remove altogether the 12% of cost and the 1/3 of actual expenses methods. The cents per kilometre rate will be modernised by replacing the current 3 different levels, which is based on engine size, with one single rate now of 66 cents per kilometre. In addition, they've announced that the logbook method will retain in place, and they've indicated that all of these changes will not impact leasing or salary sacrifice arrangements. So now let's look at government payments for families. A new childcare subsidy will be introduced from 1 July 2017, and it's going to replace the current childcare benefit, childcare rebate, and also the Jobs, Education and Training Childcare Fee Assistance. Paid parental leave. So currently, individuals are able to access both government paid parental leave as well as employer provided parental leave entitlements. So from 1 July 2016, the government's going to remove the ability to be able to claim the full amounts on both of these paid parental leaves. The government proposed a 2-year pilot program to subsidise the cost of childcare provided in the family home by nannies, which is going to commence on 1 July 2016. So that's very interesting. We've never seen anything like that before. Okay, so let's talk about government payments for retirees now. Changes are going to be made to the age pension test, which affects the eligibility for the age pension. An increase in the assets test threshold for the full pension will mean that retirees can have a greater amount of assets in addition to their family home before their pension entitlement is reduced. The proposed new taper rates, as well as the asset test thresholds, mean that some pensioners will receive a higher fortnightly pension, while others will see their pension reduced. Pensioners who lose their pension entitlement on 1 January 2017, when these changes come in, are going to be automatically issued with a Commonwealth Seniors Health Card or Healthcare Card, which is for those that are under pension age. And finally, let's take a look at superannuation. So the budget pretty much left superannuation alone, and we all breathed a sigh of relief. There was really only one proposal that they talked about, and that was to extend the maximum life expectancy from 12 months to 24 mounts to allow terminal ill patients to access their superannuation. So this means that it's easier for people to access a superannuation when they've been diagnosed as terminally ill. So that's our summary. There is a lot more that was covered and is in detail. Just click here on the link to get the full report. Enjoy.